If you feel like your money buys less every single year, you're not imagining it. Groceries, rent, insurance, gas, everything keeps getting more expensive while savings accounts quietly lose value. Inflation isn't loud, but it's one of the biggest wealth destroyers in America. And today, more Americans are turning to crypto, not to get rich overnight, but to protect their money. In this video, I'll break down these smart, realistic ways Americans are using crypto to hedge against inflation, without hype, without risky gambling, and without ignoring the very real risks involved. This is about strategy, not speculation. Let's start with the core problem. Inflation means the dollar loses purchasing power over time. Even at a normal 3 to 4% inflation rate, your money loses roughly half its value over 20 years. If you're earning 4% in a savings account, but inflation is 5%, you're actually losing money every year, just quietly. Crypto enters the picture because, unlike the US dollar, some cryptocurrencies have limited supply. Bitcoin is the most obvious example. There will only ever be 21 million Bitcoin. No central bank can print more. That fixed supply is why many Americans treat Bitcoin like digital gold, not something you trade every day, something you hold as a long-term hedge. A simple analogy, dollars are like ice cubes melting in your hand. Scarce assets are like gold bars. They don't melt just because time passes. Many Americans allocate a small percentage of their net worth, often 5 to 10%, into Bitcoin as an inflation hedge. Not all in, not reckless, just enough to diversify away from pure dollar exposure. Another smart strategy Americans are using is stablecoins for yield, not speculation. Stablecoins like USDC are pegged to the dollar, but here's the difference. Instead of earning 0.4% in a bank, some Americans earn 4 to 7% yield through regulated crypto platforms. That doesn't eliminate inflation completely, but it dramatically reduces the damage. Think of it like this. Bank savings is slow leak. Yield-bearing stablecoins is patching the hole. Of course, platform risk matters. Smart investors spread funds, use well-known providers, and never treat stablecoins as risk-free. They treat them as risk-managed alternatives. Now, let's talk about something most people overlook: global access. Crypto isn't just an asset, it's a financial rail. Americans who hold crypto aren't locked into one currency system. If the dollar weakens faster than expected, crypto gives flexibility. It's financial optionality. Wealthy families don't just hold one currency. Crypto lets everyday Americans think the same way. Another inflation protection strategy is crypto-based diversification, not replacing traditional assets, but complementing them. Stocks, real estate, precious metals, and crypto each respond differently to inflation. When one struggles, another often performs better. Americans using crypto wisely treat it as a non-correlated asset, something that doesn't always move with stocks or bonds. Diversification doesn't eliminate risk, it controls it. Some Americans also use crypto as a long-term savings discipline. Because crypto isn't instantly spendable like cash, it creates friction. That friction helps people avoid impulse spending. It's similar to how retirement accounts work. You don't casually pull money out. For many people, simply holding crypto reduces lifestyle inflation, and that alone can outperform most investment strategies. Now, let's be very clear about what not to do. Smart inflation protection does not mean chasing meme coins, over-leveraging with margin, day trading volatile assets, or ignoring taxes and regulations. Those behaviors increase risk, they don't hedge inflation. Americans who win with crypto play defense first, offense second. They focus on limited supply assets, long-term holding, clear tax records, secure storage, and conservative position sizing. Crypto is a tool. Used properly, it protects wealth. Used emotionally, it destroys it. So what's the practical takeaway? You don't need to love crypto. You don't need to understand every technical detail. But ignoring it completely while inflation eats your savings is a decision too, and often an expensive one. The smartest Americans aren't betting their future on crypto. They're using it strategically to defend against inflation while keeping the rest of their financial plan intact. Quick recap. Crypto helps protect wealth by offering scarcity, diversification, yield opportunities, and financial flexibility.